Hey guys, DJ from PTA. I'm here to do a video over just pretty much a little quick recap of my trade on Amazon, overall market conditions, and then I want to go over mistrade AERC. Now our members in the Discord, guys, again, join the Discord. There's a lot of great information, wealth of information in there that can definitely help you with your trading. And right now it's totally free, totally open and free for those who wants to join. But anyway, today was a down day in the SPY. We had a quick spike in the morning, and then it pretty much just collapsed for the rest of the day. Stayed heavy under VWAP, so those who shorted that did very well. Let me break it down in the hour time frame, because you can kind of see the trend. And basically it just stayed heavy off the trend. And again, like I told you guys before, I think we're just going down. I mean, we got this little squeeze coming up. I don't think it's going to squeeze out. I believe it's going to continue to collapse. It's just trapping longs at this point. I mean, you know, everything the way it is making you really think that things is turning around. Now, don't get me wrong. When you look at the pattern, it can go either way. You know, based on this, it would be an ideal point of looking at the risk. What is the risk in this? I mean, you just had a bottoming out here, jerk move up and come back, and then a little bottoming out there. So there's buying pressure there, but I just think it's gonna fake everyone out and then kind of go back down, and maybe even do this number and keep going. But we shall see. We shall see when it comes to the SPY overall market consensus. So let's go over Amazon. Had the stock split. Found a really good play on this today, and let me kind of go over that to kind of give you an idea of what I was thinking. Now, you know, overall, you know, it's moving up. So to me, when I see this is what I was thinking, sort of like that. And when it bounced off of this line and popped back up, I knew with the news and the information that was all out there that this was going to have some volume. People were going to be looking at it, and they might have wanted to take it higher. This was just really just a quick pop. So when I actually got active in the trade was based off pretty much the first 10 minutes of the day. So let me kind of break that down to you. So we had this massive uptrend, and like, to really see it, you got to kind of look at it like this, like this is the trend. So when it broke this, I was looking for, you know, either a pop back up into this and collapse, but it actually kept going, or just get back into it and then fail. I wasn't really sure what it was going to do, but I knew the overall trend was up. I didn't think it was going to stretch as much as it did, but it did, which was great. So where I found support, or the way I looked at support, was, okay, you had this rally up, and then you had this slam back, which to me just wasn't sustainable looking at the chart. So if we go back over here to like 5 minute, what I saw in the 5 minute was this aggressive pullback. All right, so I saw this, all right, this aggressive pullback, but moreover, on the 1 minute is where I found the support. So let me go back here, kind of show you where the support is. So when I had this big drop down, this is sort of how I looked at the support. And I want to get in here so you can kind of see. We got to trade above the 200-day moving average. That was one thing. The second thing was looking at the decrease in volume as it dropped. Had a quick pop up, and then the volume kind of just plateaued. So when this stock jumped and it could not drop below, that started getting me interested. This right here was a pop down, but they brung it back up. This became my support. When I saw this candle, I said, okay, 124 support. So then I took a look at the stock and I seen that this is the same area where they ripped it up back up at and shot it higher. This is also the same area where it dropped, retested here and pulled away. So whenever I see an area where, and again guys, you got to look at this from multiple angles to get confident in your trade. When I looked at this and I drew out this area, you could have drew it beforehand, you could have drew it after the fact. I drew it after the fact and then looked to my left. When I looked to my left, I saw this big area right here. So not only did it go back through, come back, and then retest and fail, that's whenever I see a stock push away from an area like that. I mean, it pushed away from an area. That means there's a lot of liquidity, a lot of people sitting in that area, so on and so forth. And again, if you look at it again, this is the same area again that it actually sucked the price back up before it went higher, and then it tapped this area again. So when we look at this over the last just 3 days, okay, so what I'm gonna do is take this back out. Let's see, 1 minute. Let me do 20 days. All right, cool. So you can see 1, 2, 3, 4, 5. Massive pull down. That's 6. So 6 times it hit that area over the last few days. So since June 1st, it's hit this area 6 times. And what I mean by that is it went up, they pulled it down. Went back up over it, they pulled it massively down. When I mean massively, I mean just from this swing high down to the low is about $4. So they swung it down from there. Then it came back, pulled it right back up, and then they kept it going, pulled, kept it going higher. Came back down, act as resistance, act as support. So when I seen it come close to this area, this gave me a zone. So I looked at the bottoms and I looked at about right there and how all the candles kind of stopped right there on that 124, 113. So I knew that this area from like 115 or 124.15 to 124.01, or you know guys, I like flat areas. So 124, I knew that that was probably a nice demand zone. So what I did is when I seen this, I let it confirm and I jumped in here, which is about 125.01. So that's where I got in at right here. $125.01, and then we had us a nice little rip the opposite way. So that ripped in itself, I mean, just the first rip up before the major pullback, the structural violation was $3.40 something. So, you know, when you get in and, you know, you're looking at a stock, you can kind of, you know, look and see, okay, I see why he got in, or, oh, I see what he doing, or, you know, I see how that played out. So once it violated here, 127, could have pulled some shares off. what I end up doing, I'm gonna take you to a higher time frame. One of my secrets, I go in and look at higher time frames to see where it actually starts to break the lows. So I end up getting out somewhere around here, 128 30s, 128 40s, right here in this area is where I started getting out, because I just kept looking at the higher time frames, waiting for it to actually break. So I looked at the 5. When the 5 broke, I looked at the 10. When the 10 break, I look at the 15. And then once the 15 break, I typically end up getting out. So this is how I stay in a trade for a long time. When people ask me that question, I say, yeah, I got in the trade right there, 128 30s. It's about where I end up taking most of my shares off at. So I just ride the wave. I ride it until it completely starts to violate on all the time frames, and then that's when I typically get out. So that was my Amazon trade. 125, I got out. It was like 128 30s, 40s. I didn't play the top. I don't try to catch the top. You probably will never catch the top because it's just not designed that way. But if you can get the meat of the move, which I felt I did, I had $1 risk, got a $3.50 gain, so it's a 3-to-1. I think that was a significant, decent trade, especially with it pulling all the way back and then giving most of that back. So, and actually close out the day red. So that's something to think about, when it comes to trading. How do you get the bulk of the move? How do you get most of the trade? Not all of it, but if you can get majority of it, 70% of the move, you did pretty well. Did actually pretty good. So the next stock I want to go over is Aerc. So Aerc had made a low of $1.76, bounce, got some massive volume to come in. It's a healthcare stock. Looks as though FDA gave it a clear on its air purification system or device, so people got antsy. Again, it's a fairly low float stock. It's only 13.8 million. The stock rotated today, so you're looking at about a 5-time rotation on that. Did almost 72 million in volume. So it was definitely on a lot of people's radars. Again, guys, once I had placed my trade on Amazon, I ended up walking away from the desk, set my stop losses where I thought things were going to go, and then I took off and had things to do. So this is one of those trades, was up over 100%, so it's definitely something that's going to be on the radar tomorrow. That's kind of how that played out. So looking at the chart, your key thing is to always look at your areas. Let me see something here. So first thing I like to do is try to find an area where it kept rejecting. So right here will be an area. See how it reject, and now it's acting as resistance. So that will be an area. I probably say this was an area too, right there. Now why is that? Because you got rejection, you got a breakdown, rejection, it rejected off of there, came back up, broke through it, came back, tried to reject, then rejected, and then pulled down. So 304, 342. So we gonna move this to 340. And then we're gonna move this one to $3. Alright, so now I got my key areas of interest where I'm thinking that this can even be an area. Rejected, rejected. So this would be 350. You notice how that said 344 and it was 354. So it's kind of sounds like a supply zone, perhaps. But let's take a look at the chart. So we got our areas. We came into the trade today. Let's look at the 5 minute. I'm gonna first look at the hour. So it pretty much started running out the gate. See how right there it hit pre-market high right there. Let me zero in so it's probably a little bit clearer. Yeah, so you see how it hit pre-market high. Let's go to the 5 minute so you can see this. So as you can notice, it went up, and then actually pre-market high was down here. So it actually went up. Look like very little volume. Yep, very little volume. So it looked like the volume didn't really creep in to about here. Yep, about here. So you get this massive rip. Now, when I'm trading, I'm always looking for a pattern. So the pattern that I see here is we pretty much had a consolidation. And then we had a rip. So this was A, or this was A. Now, why is that? You know, we got buying, 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 and then we had a switch. So now it's selling, selling, selling. So pay attention to the candles. Now this is all on the 5 minute. So let me give you an idea of what I'm saying. This was continuing to make higher highs and higher lows. Each one of these spots was doing that. And I look at the wicks, but I pay closer attention to the body of the candle, the actual open close. So fast forward, we going back the opposite way. We making lower highs and lower lows. Here, 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 so on and so forth, right? So then we got this little bounce, and then another pullback, and then a rip. So for me, looking at this, I probably would have drew my line here, looked at this right here as support, now most people say, well, why would you look at the support? You had buying pressure pull up from there, came back, tested it, and then perked up and did higher. So if you looking at this from a trading aspect, there go our pattern again. Just have to wait for it. So this was A, this was B, which was support. This here was C, and like I told you, you always want that curve. So when I look at this, I probably would have played it, and let's look at the 1 minute so I can see how the price action was. So looking at it, probably would have seen this curve and played it here. To be completely honest, probably would have played it off of here. And the reason I say that is because I like to start the hit, come back, hit, which would be a nice move, and then also it allows my my lines to touch. So I would have liked to see it go up, wedging, and then seen this higher low, jumped in here. Probably would have jumped in somewhere right here, because this is moved down, this is went up, this is probably a nighting candle. I would have got in somewhere right here and risk to here. That's 20 cents. Risk to the thing, that's 30 cents. So me being the type of trader I am, probably would have got in here, risk to 30 cents, and then let her rip. So give or take, looking at the chart, I guarantee you that this is probably a non-EMA right here. So we had a push into it, then we had a curl. This right here violated, but this is where everybody got in heavy. So looking at that, we'll go back to the 5. Yep. They got in here, ripped it, and then everybody massive. So this is the massive candle. This move and this move was the massive candle that really sparked this move. Now, if you look at that, this is right into a supply zone, and then it broke out. So it's no secret that market went right up here, sucked it back down from a resistance, pulled right close to the resistance, formed an ABC, brought enough energy to get over it. They went back, took some more orders off, pulled up, gathered some more here, and then created a higher low, swing low from the previous, and then ripped it right through the supply area. And then after that, it was on to the races. So again, you go back down to the 5-minute. Boom, 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 boom. Right here is where it violated. I would have went to the 10-minute, took a look at that. So again, go back to the 5. See that it got violated. Let's look at that times around 11:25 a.m. Eastern Standard. So go back to the 10-minute, 11:25. So that was 11:20, 11:30. The 11:20 candle did not close below this candle. So now I'm looking at it like, okay, it's still in the uptrend. Boom, 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 boom. Right here is where it violated. So this time frame was 12:20. Okay, great. So I know 12:20, I gotta go back to the 15. So this is 12:15, 12:30. Right here is where I would have took some shares off. Right there. 375. So you're looking at an entry down here. 276. 375. That's about a buck. And then it broke. So I would have went down to the 30. So we at 12:30. Brought up. Would have went down to the hour. Still making higher lows. Then I would have went to the 2-hour, and I would have held it for the rest of the time. So you always want to hold when it's on the higher lows, because then you can just sit your order right behind here. Once the next 2-hour roll in, sit your hour right here. Next 2-hour roll in, sit your candle right here. Now you're starting to let the cherry play out with massive amount of shares if you can on that trade. And then again, guys, when you see these pullbacks and it's still holding, it might be a 15-minute pullback, but heck, that's a good pullback. That means you're going to get a massive rip. So there is where I would have probably played it at. Just looking at the chart. Somewhere right there. So let's go down to that's the 5-minute. Now let's go down to a 1-minute. Could have got in right there. So this would have been an ad. 402, 403 ad. If you were just getting involved in the trade, that would have been great risk to reward. So you get this rejection, and then you see it's rejecting here. So what did it do? It dropped down, bounced, and then went sideways. So we had some sideways price action, then the curve, pulled over, and then went higher. So I'm always looking for those type of patterns. You know, you get you a massive drop down, bounce up, held, and then continue to do this to go higher. Now, it's not going to be exactly as clean as that drawing, but I mean, this gives you the idea. Massive drop, bounce up, pull back, you're setting higher lows, looking for the curve. Now, you could have played it in this area, or you wait for the confirmation through the bus. Most cases, we want to wait for the bus. and then from there you just risk to here. So you're literally talking about 17-20 cent risk. Even at the low of that candle was 22 cent. You just want to risk, you can risk 34 cent to the lows, 35. So I usually risk no more than 40 cent, but I'm typically around 30. But these 20 cent moves is nice. You know, 20 cent first rip was 63 cent. So that was a 3-to-1 right there just off the first rip. But you know, it ended up swinging down, not getting to your stop loss, and continue on. And then you can just buy into each pullback until it's completely done with the trade. But again, guys, I usually go back out to the higher time frames to look for potential plays and look for that overall as a consensus of which way the market's going to go. So you can get an idea of what makes sense for you. Get into the trade heavy, and then, you know, you start off small down here and you just keep adding. And as it climbs, then you can build you a nice size position coming into the next day. I think this one still got some legs. It can run. Great FDA news. The market's been kind of sideways or whatever, so I know a lot of people are talking about this stock. A lot of people are playing it, so on and so forth. So it's something you definitely want to look into. Is it something that you can play for tomorrow? So guys, hey, thanks for taking your time to listen to this video. And if you have any questions, concerns, drop them in the comment section. I definitely reach out to you, whether it's through the Discord or privately through Twitter or whatever the case may be. But we'll definitely contact, or I'll even answer the question right in the comments. But if you learned something from the video, click the like button, click the subscribe button, and the bell so you don't miss any of the notification and alerts when we bring out new material. And as I always tell all new traders and old, stay steady and stay focused.